I think from a stimulus standpoint, actually the U.S. stimulus might be the most important. With rates coming down in the U.S., we might see, maybe not today, but we might see the dollar, at least slow its ascent or maybe even stabilize from here. That's very positive for a lot of emerging markets, like Latin America, like South Africa, even Korea. Those are generally very positive for emerging market equities there. So I think the U.S. stimulus on its own is very positive. But the China stimulus, of course, was a big surprise. And I think, anytime that we can see a floor beginning to build under the housing market and some help for the local governments in China, I think that's very positive. We haven't really seen enough of the stimulus aimed at the China consumer for me to be particularly excited about the stimulus, really impacting the economy in a, I would say, a surprisingly positive manner. And until we see really stimulus focused on consumption, I'm not sure how much spillover we'll see to the rest of emerging markets. Clearly, the investment and manufacturing growth is positive, but I think we've seen that for some time now, and I'm not sure that's an incremental change. Your other question, I think, is a great one. We have seen a pretty significant move of global multinationals moving supply chains out of China, or at least on the margin, adding new supply chains in locales closer to home, whether it's Eastern Europe or, of course, Mexico or even Vietnam. But maybe what's just as interesting is how much outward investment we've seen from China, and that's been pretty exciting, particularly in Southeast Asia.
Okay, before we go, Derrick, at least wrap up this segment and come back for another chat, I do want to get some stock ideas from you. You like Reliance Industries in India, Trip.com in the Greater China region, and InPost.
Yeah, it goes to show there's a lot of really interesting opportunities across the emerging market spectrums. Reliance for us is really almost a contrarian pick. It's been under pretty significant pressure year to date within the context of course, the Indian market that's been very strong. Reliance Industries operates in a variety of businesses, as you know, including refining, retail, and telecommunications. And the refining and retail business have seen some real pressure. But as we look into 2025, we think some of that pressure in the refining business will begin to lift and refining margins will improve. And they've been rationalizing some of their retail businesses, and I think that will flow through into improved operating performance as we get into 2025. So the stock is relatively cheap, which we don't see much of in India, and we think that it's more than priced in some of the really cyclical headwinds for Reliance. But if we look around the world, even in places like Poland, which doesn't get as much attention, really interesting, really good growth. And some pretty exciting companies. InPost is pretty simple. Right? They do basically post boxes for delivering packages, and they're by far the biggest in Poland. And they're taking that model into the rest of Europe, France, the UK, into Ireland. A really great model, very simple and very high return. So we like companies like that.